Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Thursday, June 20th, 2013. Well, a change of trend today, and here technically we have seen confirmation of that change of trend with a candle that's made a lower high and a lower low. The previous day's trading, technically the trend hadn't changed, that trend had still been to the upside. And we had an outside day in bar chart terms, which doesn't change the trend. A very solid bearish candle, and it did suggest a very strong possibility of a change of trend. And we also saw the tweezers top in a Japanese candlestick bearish reversal pattern, and we have seen confirmation of that today with a candle that's made a lower high and a lower low. Now, just looking at the size of the body of this candle, it has reduced slightly on the size of the body of the previous candle. And even though today the sellers have made some net bearish progress, and still a large amount compared to the recent past, it is a bit smaller than the previous day's trading, and it does suggest there is a slight hint there that the sellers may have lost some downside momentum today. But when we look at the shadow on the bottom, they certainly have. We've seen upside price rejection from below the 131.96 level. That's been a previous important level of support and resistance, and today has acted as support for this market, as had the area around the 131.45 level. Strong rejection from both of those levels, with the market failing to close down below there. The market has closed roughly around the midpoint level, so even though we have a black body candle and the trend is down, the sellers aren't supporting this downtrend terribly strongly at the moment, and we've had the neither side really close with control of this market. If anything, the sellers have very, very weak control, but what we'd like to see here is the sellers taking control, continuing that downside momentum, and even though they've made net bearish progress, it just might not be enough to sustain this downtrend. Tomorrow, the 131.96 level will be crucial to this market if it is going to trade lower, as will the 131.45 level. But we do have that solid overhead resistance in that zone, and I've highlighted that previously, and today we saw the market trade the high to that area and be rejected from there. So that will be a very, very solid barrier to this market trading higher, as will the 133.20 level. Now, in terms of the Fibonacci extension, the Fibonacci retracement here, and here today we've seen the market take out the important 61.8% level and test to the 100% level and be rejected from there. Previously we saw the market testing around the 50% level. It was a fairly solid bearish candle and did suggest the market was destined for lower levels, and here we have seen that. But this solid price rejection from the 100% level and the failure of the sellers to strongly support this downtrend does suggest that there is potential for a change of trend. So we should be watching for a potential higher high and higher low. By the same token, however, we're not seeing any strength from the buyers here really. So it does raise doubt about the market trading further, or trading to the upside and taking out the high. So we do need to be on the alert and watch for the potential of that. But also there is a possibility of the downtrend continuing. In terms of the Fibonacci extension, and now that the market's trading in a first time frame downtrend, we're looking at the relationship of this current first time downtrend to the previous time the market was trending down, and here we've seen price rejection from below the 161.8% level, with the market failing to close down below there. It does suggest strong possibility of a change of trend, but as I've already mentioned, the story here is about the lack of strength from the sellers, and there's no sign that the buyers are coming back into this market at the moment. So let's watch for a potential higher high and higher low, but we could also see the market test to lower levels. We do need just to wait and watch how the market behaves around the high of the current candle or around the low if we do trade around those levels. If we do see the downtrend continue, the 261.8% level at 130.80, coinciding roughly with this strong price rejection that we saw around this area about a month or so ago. But certainly here there is a possibility of a change of trend. Now, in terms of Ichimoku, obviously the market maintains its bullish activity in the long-term time frame by trading up above the cloud, and the market is retracing back towards the cloud, and the cloud represents equilibrium in that long-term time frame, and the market is attempting to establish that equilibrium. So the market has moved to disequilibrium back to equilibrium. It will find equilibrium and then move back away in either direction, either above the cloud or down below the cloud. In terms of the medium-term time frame, the market's trading above the Kijun Sen, so That's maintained, but we do have a flat Kijun-sen and price action is being attracted back towards it. So whilst that Kijun-sen remains flat, there is still a possibility of this trend continuing down and for the market to test around this Kijun-sen around the 131 level. We do now have a bearish market in the short-term time frame, and that is a significant change in sentiment in this market, as we've seen for quite some time. The market's been trading above the Tenkan-sen. We had the bullish breakout up above the Tenkan-sen quite a long period ago, around the late May area, and the market was trading down below the cloud, and then the market found enough momentum to break up above the cloud. For all that period of time, the market, except for one area here, the market has been trading up above the cloud and was finding support around the cloud. We found support at the cloud yesterday, but today we've broken out down below there. Now the only thing that worries me here is that it's not a terribly bearish breakout. The size of the body does worry. The body being black, it does suggest that these sellers still have some strength in the market, but certainly failing to close down below the midpoint level substantially, and seeing this long shadow represent the sellers losing commitment does raise some doubt about the market continuing down. So overall, we're getting some mixed signals here. We have a bullish market being maintained in the medium and long-term time frame, but not in the fast-term time frame, a change of sentiment. The area at 131.96 and 131.45 are crucial to this market. They should provide substantial support once again to this market. But if we do see a bearish breakout down below 131.45, we could quickly see the market testing down below the Kijun-sen if it fails to hold a support, and potentially down to around the 130 level. But we have a strong barrier overhead that may limit the upside in this market, and we do need to be patient and wait for resolution either above the strong resistance or below the strong support.